Thank you, Madam Mayor. We are recording.
Thank you and good evening. I'd like to call to order the regular council meeting for Tuesday, April 18th, 2023. Is there any public input tonight? This meeting is now open to statements from no more than 5 members of the public and no more than 2 minutes in length. Okay, seeing none, I will move on to the approval agenda, including late additions and deletions. Will someone move that the April?
Thank you, Madam Mayor. We are asking that a closed session be added to your item 18, and then adjournment be moved to item 19. And we're requesting that it be closed under section 91C, labor relations and other employee relations. And we will give you that resolution at the time.
Okay, so I need somebody to move that the April 18th, 2023 regular council meeting agenda be adopted as amended. Councilor DeBruin and Councilor Plan. Seeing no delegations tonight. No public and statutory hearings tonight. I'll move on to the adoption of the minutes in a few minutes when I see Councilor McNary. Then I'll just give him a minute. Okay, will someone move that the April 4th, 2023 regular council meeting minutes be adopted as presented? Councilor DeBruin, Councilor Plan. Is there any business arising from the minutes? Reports or reports from committees of council or commission? None. I will move on to 10.1, 2022 financial statement.
Thank you. Through the mayor, it's actually going to be Taylor Turkington that's presenting the financial statements to council from Bestwick Hildebrandt Lund Chartered Professional Accountants, who is the council appointed external auditors for the district. They're appointed on 5-year terms, and then it goes to RFP. So I will turn it over to Taylor.
Welcome, Mr. Turkington.
Hello, can you guys hear me okay?
Yes, but we don't have your camera.
Oh, sorry. Is that better? Excuse me. Yeah, so my name is Taylor Turkington from Bestwick Hildebrandt London Prince George. Working on the audit for the District of Lillooet as at December 31st, 2022. I don't know if you guys want me to sort of share my screen and make it easier to follow along. I'll just have to get someone to give me share access, and then we can get started.
Be able to now?
Perfect. I see it here. So can you see these okay now? Hello?
Yes, we can. Thank you.
Okay, sorry, just a little quiet. Yeah, okay, so we'll get started. So yeah, my name is Taylor from Bestwick Hildebrandt Lund. Page 1 of the 15 to 62 in your agenda addendum. We have the management responsibility for financial reporting. So what this is just discusses the fact that while we do help and give assistance in reviewing and preparing the financial statements. They are the responsibility of management and mayor and council. And this is just a note sort of stating that at the beginning of the statements. Next page, we have the independent auditors report. This is essentially what we are engaged to prepare. This is where we give our opinion on the financial statements. So in our opinion, the accompanying financial statements present fairly in all material respects the financial position of the District of Lillooet as at December 31st, 2022. So what that means is that this was a clean audit report. We didn't have found no issues. Everything went pretty smoothly. And everything was looking pretty good. Next, we have on this page, we have the responsibilities of management and those charged with governance. That's very similar to the page before, just stating the fact that the statements are the responsibility of management and mayor and council. On the next page, we have the auditor's responsibilities for the audit of the financial statements. So this just gives us sort of a breakdown of what we do as part of our audit procedures, and the fact that we identify and assess any risks of material misstatement, make sure we understand the district's internal controls that are relevant to the audit, make sure all the accounting policies being used are reasonable and appropriate, and make sure the overall presentation of the financial statements are in accordance with the public sector accounting standards. And the third page is just where our signature will go once these are approved and the draft is removed. On page 19 of 62 in your agenda item 10.1, we have the statement of financial position, also known as the balance sheet. This is where it discusses the financial assets, liabilities, and non-financial assets of the district. So total financial assets at the end of 22 were 14.3 million, up from the 12.8 in 2021. That's mostly due to this increase in cash of about 1.2 million. And that's mostly due to the net income for the year, as well as a slight about $200,000 increase in accounts receivables at the end of the year. And that's just a timing thing. There was some more grants that were yet to be received at the end of 2022 compared to the prior year. Total liabilities for the year were $2.8 million, down slightly from the 3.1 million in 2021. The majority of that difference is this decrease in deferred revenue of about $150,000. And that's just decreased due to usage of the COVID Restart Grant deferred revenues from prior periods. That results, the assets less the liabilities results in a total net financial assets of $11.4 million. That brings us to non-financial assets, which are prepaid expenses and tangible capital assets. The total of those decreased to 27.5 million at the end of 2022, down from the 28.3 in 2021. And that's mostly due to this decrease in tangible capital assets. And that's just due to depreciation of the capital assets throughout the year. All that together results in an accumulated surplus at the end of 2022 of just over $39 million. On the next page, we have the statement of operations, also known as the income statement. It shows the different revenues and expenses that were incurred during the year. So total revenues for 2022 were 7.6 million, up from the 7.4 million in 2021. Some changes to note here is there's an increase of about $150,000 in taxation. Excuse me. And that's just due to more taxation revenues being budgeted for the year. There's also a larger increase in the sale of services of about $200,000. And that's just there's an increase in the amount of user fees throughout the year. And then there was also a increase in investment income of about $150,000. And that's just because of bank rates improving as at the end of 2022 compared to 2021. Total expenses for the year increased to about $6.6 million, up from the 5.9 in 2021. That increase is due to increase in general government expenses as well as recreation services expenses. The increase in the general government is mostly due to there was more grants and awards given out during 2022, with the increase in recreation services being attributed to more recreation services being utilized by the community as we move away from COVID during over 2022. That results in excess revenue over expenses or net income of $947,000. That totaled with the loss on the disposal of tangible capital assets results in a total net or annual surplus of $939,000. That added with the accumulated surplus at the beginning of the year results in, as mentioned before, an accumulated surplus of $39 million. On the next page, we have the statement of changes in net financial assets. This just gives a sort of breakdown of where essentially what it says. There were changes in the net financial assets. You can so some things to note here, or you can see there was $562,000 in capital assets purchased compared to the $1.3 million in 2021. Amortization stayed relatively the same at $1.3 million. And then that coupled with the loss on disposal of tangible capital assets results in a increase in net financial assets of $1.7 million compared to the $1.5 million in 2021. On the next page, page 22 of 62 in your agenda item, we have the statement of cash flows. So what this does is gives a sort of snapshot of where cash came from and where it was spent during the year. Broken up between different types of activities, operating activities, investing activities, financing activities, and then other activities. So total cash flows from from operating activities was an increase of $1.8 million, with a decrease in cash from investing activities, from payments to acquire investments of $30,000. And then other activities was a decrease in cash, as mentioned before, to purchase capital assets of $562,000. All those together results in a net increase in cash of $1.2 million, resulting in cash at the end of the year of just under $12 million. So after that, starting on page 23 of 62 of the agenda items, we start with the notes to the financial statements. So what this does is just sort of give more information about some of the numbers that we've just gone over. I'll quickly go through these and sort of touch on any that I think would be of interest to Mayor and Council. If you have any questions on anything, just speak up and stop me, and I'll do my best to answer at that time. So yeah, note 1, significant accounting policies. This is essentially exactly that. It just gives a description of the different accounting policies that the District of Lillooet uses in its financial statements and in its accounting throughout the year. On the next page, we see the revenue recognition, and this just discusses the different types of revenue and how those policies apply to the financial statements. between the different types of revenue, taxation, utility rates, sale of services, grants, and investment income. On the next page, page 25, we have cash and cash equivalents. This just talks about what makes up the cash amount on the statement of financial position, as well as deferred revenue. Just talks about how deferred revenue is recognized and when the revenue is viewed. Page 26, tangible capital assets. This just talks about the different types of capital assets that are held by the District of Lillooet, as well as how those different types of assets are amortized over the useful life, anywhere from 5 to 80 or 100 years. And then the rest of this is sort of, on these pages, is just some sort of boilerplate. They're all pretty much the same. Starting on page 28 of 62. So we have note 3, investments. It just shows how the investments are broken up between the two different MFA investment accounts, the ultra short bond and the money market fund. Note 4, receivables, just shows how the different accounts receivables are allocated at the end of the year. You can see there was, as mentioned before, there was a timing issue sort of thing where there just happened to be more trade accounts receivables at the end of the year compared to the prior period. On page 29, we have the note 7, accounts payable and accrued liabilities. This just gives you a breakdown of the different types of accounts payable and how they compare to the 2021 year end. On page 30, we have note 10, employee future benefits. This just sort of gives a description and information about the employee future benefit amount that's recorded in the financial statements related to the sick pay and other employee benefits. Note 11, accumulated surplus. So this just gives a breakdown of the different surpluses and reserve funds that are held in the district as at the end of 2022. And you can see any increase and decrease in the surpluses or reserves. Note 12, tangible capital assets. This gives a breakdown of the different types of capital assets, as well as if, when, or where, and if there are any additions or disposals during the year, as well as the different amortization amounts that were incurred in 2022. Note 13, segmented reporting. This just talks about the different segments that the district has its revenues and expenses broken up into and what makes up each of those different segments. That's the same on the next page. Starting on page 35, we have the note 14, segmented information. So this is a requirement for PSAS to have this report in here. And it just gives a breakdown of the different types of revenues and expenses broken up between the different segments listed on the top here. This is where you can see the different types of expenses such as salaries and wages, supplies, equipment, contract services, and that sort of thing, broken up between the different segments as well as the totals for 2022 and 2021. After that, we have note 15, taxation. This just gives a breakdown of the different types of taxation revenue that was received during the year, as well as the collections and payments to other taxing authorities at the end of 2022 and 2021. On page 37, note 18, grants and government transfers. This just gives a breakdown of the different types of grants that were received during 2022, So you can see here, there was an increase in the provincial government grants that was received in during the year. Page 38. We have note 22, the budget. This is just a reconciliation that ensures that the financial statements, the annual surplus, per the financial plan bylaw, agrees to the annual surplus on the financial statements on the statement of operations. Note 24 just gives a breakdown of the two different trust funds broken up between the cemetery and Lillooet community funds. Note 25, the municipal pension plan. This is another thing that comes from PSAS and from the government, and just talks about how there is the municipal pension plan that the district pays into, as well as its employees, and then how often the valuation is done on this municipal pension plan. Note 27 just talks about the different contracts that the district has throughout the, or going on at the end of the year. And then there is the COVID-19 Safe Restart Grant, and this just gives a breakdown of what makes up the COVID-19 Restart Grant, as well as where the funds were spent during the year. Yeah, and that's about all I have. Are there any questions?
Mr. Turkington, I'm sure you work on lots of municipal financial statements every year.
Mhm.
In your opinion, as the auditor of the District of Lillooet, how do you look upon the substantial difference between the budgeted profit of 73,000 versus the realized profit of 939,000, representing about 12% of revenue?
So these two numbers here. I mean, it's not uncommon. It happens all the time because different things can change throughout the year, and you budget as best as you can with the information that you have at that time. I guess it's more of an issue if there was a significant loss here, is when you'd sort of want to sort of ask a few more questions. But no, this is common to see a budgeted surplus less than the actual surplus mentioned. Does that answer your question?
I asked for your opinion, and you gave me it.
Okay, just making sure.
And as a follow-up? Through the mayor, in your, so on another matter, in your professional opinion, how do you look upon the fact that the investments in capital expenditures are substantially lower than the amortizations?
Sorry, the tangible capital assets?
Yeah.
Oh, that's just because of amortization and depreciation throughout the year. That's why it decreased. So that's based, because when you purchase it, it then gets depreciated over its useful life. And there just happened to be more depreciation this year than there was capital asset additions.
Okay, I think that's it. Very much.
Awesome, thank you.
Thanks, Taylor.
Yeah, I just want to say sorry before and here. I just want to say thanks again to Joni for all her help and the staff and everything this year. It really made won't say enjoyable, but it made the audit a little easier. I appreciate it.
Questions, will someone please move that the District of Lillooet's 2022 financial statements be accepted as presented? Councilor McNary, seconded by Councilor Land. Any further questions? question?
This is my first year looking at a financial statement of the municipality, and I'm still, and that's why I asked the opinion of Mr. Turkington. I'm still sort of grappling with the fact that our annual surplus exceeds 35% of taxation. So our taxation revenues were 2.7 million. Our annual surplus is 930. Can't just help have a feeling that we overcharged our taxpayers. I'd like to shed that idea. But I'm not so sure if there's some context that can be provided by staff to help us sort of understand that number and how that has come about, moved from 73,000 to 930.
Mayor, a really simple example of how that happens is we find out about a grant. We get that grant, but we never knew about it beforehand. So we were anticipating the district paying for it, but now we've gotten additional external funding in turn from a grant, which will increase our surplus. That's a very simple example of where that can come from.
So these were planned expenditures that we now got grant money from.
That's a very common example of how that happened, yes.
But our budgeted revenue was actually higher than our budget, than our realized revenue. So we didn't get as much money in as we had hoped to. We spend a lot less money. Or that's what I read on page 20 of 62.
And the other thing that I understand why we have to do it, but I don't agree with it, is that council actually adopted an amended budget at the end of the year. That's not in here anywhere. This is the budget that's adopted by council that sets the tax rates. So it's the budget that's adopted by council at the beginning of the year. So many of these budget amounts, very well, I know for sure the grants and government transfers, the budget increased hugely with the amended budget, but that's not reflected anywhere.
So was the amended budget, did we decrease our projected expenses as well then?
We increased our projected expenses as well.
But all right. But we only spend 6.6 while our budget was 8.
Yes,
You're saying that the 8 was the original budget, which we increased even further in the amendments.
yes. One, okay, again, through the mayor, one simple example is we increased both our revenue and expense budget by $1.4 million, hoping to get the grant for is it Russell Street or PRV? For the PRV project.
But we didn't get it.
Correct. But that $1.4 million would show in the revenue section on the financial statements, but it would not show in the expense section on the financial statements because it's capital.
But we didn't get it. And even, so, I mean, that's the budget side of things. The fact of the matter is that we have a $939,000 surplus. If we had cut taxes with 33%, we still could have broken even last year. Right? So I understand that there's changes along the way that are not reflected in that note 22 column. But we started with we start with an expectation that we would barely break even, which is prudent budgeting, I think. We've modified the budget, but we still came in with almost $1 million surplus, and which is great for the community because we can put that away for later use and that sort of stuff. But it wasn't by an act of this council or previous council that was intended. The previous council didn't intend to make $1 million profit. Did it?
Again, capital expenses aren't shown anywhere on here,
Quick question.
but that $1
My
million
question, my question is, did the previous council intend, as it went through, did it intend to make $1 million profit?
I would assume not, but that would be a question for the previous council.
I would say no.
We still ended up with that.
I have a question then. Could part of that accumulated surplus be that when we have a project, and I'm using Airport One because that was the one that we had in question, and it was, I believe there was a $31,000 contingency fee put on it. If we don't use those, and we have a lot of projects during the year, a lot of projects, if we don't use those contingency fees, we are taxing because we're going to assume that we have to have the money there for that contingency fee. But if we don't use that contingency fee, then it goes back into the surplus.
That's correct.
So that I think also adds to that $939,000 dollar. It's not projected because again, we have to have the contingency fee, but it always is. It's a hard one when we're putting that into our finances, which I always have a huge problem with that too. Because we're putting that into our finances, we're basing our tax rate based on those kinds of things, and yet when we don't use them, they do go into surplus. When we do use them, then sometimes we go over and they have to come back, so it's. I think that part and parcel, did we plan on making $1 million? No, we did not, but I think that we have to use that kind of information going forward,
Well, and the same lines, I don't think the year before council intended on having a $1.5 million surplus either. It's not entirely, it's reflective of the accounting standards that we have to follow, but it's not entirely reflective of what you would see in your financial statements for your business.
That's where I'm getting.
Yeah.
I know, and I think that with the finances, it's, I go back to, it is so much to learn, and having a good understanding of it is hard. It's hard, and we just need to keep plugging away at it until, right, yeah, it's a tough one.
Can we pay out dividend? No, we collected $2.7 million. We didn't use a third of it. And we made contingencies, didn't end up using them and whatnot. And I feel we have a responsibility to taxpayers that when they entrust us with their funds, they have expectations that we deliver upon those funds, that we deliver services, capital improvements and such. When a third of it is not spent, like I said, I mean, as a business, I would say, awesome, profit. You can go on holiday with that, but as a municipal service, where there is no profit objective, and you've made that very clear, Mr. Denegar, in our strategic planning session, is that, I feel that while under normal circumstances we'd be joyful with a profit, that I think we may miss an opportunity to deliver on the services that were expected and paid for by the citizens. And I'm just trying to think of, okay, well, how can we deliver them, maybe not in 2022, but in 23 or 24.
Oh, I hear what you're saying. I'm both receiving dividends too. Stock. So I'd say that it's obviously better words than I can, but it is actually kind of a rolling dividend each year. In that the ability to keep the tax rate down is because of previous year surpluses, as this large surplus was used this year to keep our tax rate well below inflation. And that just carries from year to year. As the surplus is realized, we keep the taxes down. So it might not be an immediate, at the end of the year for Christmas, you get a dividend, but next tax season, what you'll see in the draft budget from staff is that like this year, a large chunk of the funding will come from previous year's surplus. We're able to pay back indirectly by not raising taxes.
It's always by the tax rate increase. Because.
So that means that we come up with a contract for Town Creek. We'll have some money for, we defer that to that part of it, or do we need to use the water part of the tax?
If it's a water capital project, it really does count for the.
It can come under that fund also?
It can come out of the water, yeah, and that's reserves, so. Very indirect, well, not very, but indirectly it's related to taxation. It has to go through the process, it's not actually. But the amount that the council decides each year to fund the water reserves, general reserves, that comes up the tax increases. But in a year like this, when we're faced with 7.7% inflation, the dividend is. Council managed to keep the tax rate lower than that because of the surplus increase. That's moving effect. And council can, of course, next budget cycle say, you don't want as much surplus, tighten it up even further. And the risk increases that if something happens, inflation goes crazy in 2025, we might not have the legal right to fund that inflationary increase from surplus. Council might be faced with very tough decisions about slashing services and cranking up. So you can use that.
What you're saying is we're looking pretty this year, next year.
And last year.
That's a guess.
We are working with very sophisticated crystal balls.
But you thought, I mean, the council of 2022 made a budget that was 74,000 as a projected profit. As we did with our budget that we just passed, I forget the exact number, but it was slim as well, maybe a little bit more, but that's where we start, and that's where council sets its intentions and as it moves forward. Like I said, I mean, I would hate to see that at the end of this year, we'd have another $1 million profit, because we set out together and say 74,000. If we deliver on all these services, then 74,000 is what we'd be happy with. So if we're heading again towards a $1 million profit, I would like to know beforehand so that we can take decisions along the way and say, let's ramp up this, let's ramp up that. Let's, expand services as we see that there is now more money available than we have previously anticipated. So I would like to make a motion that we see quarterly financials so that we can not be surprised at the end of the year of a $1 million profit, but that we can see sort of along the way where we stand, and that we can make corrective actions where we can pass motions or measures or implement policies along the way so that we don't end up somewhere where we.
If I could, through the mayor, I just want to be clear that you're not talking apples and apples. When you say that we budget or previous council budgeted for a $73,000 surplus. They actually budgeted for a $237,000 surplus. So it's not apples and apples. These financial statements do not include any transfers to and from reserves. They don't include any capital expenditures, and they don't include any principal payments on debt, which we don't have anymore, but, so you're not apples and apples. I do have, in the annual municipal report that I'm doing right now, I have made a point of actually reconciling to the budget that council adopted, as well as reconciling this way, so that council can see the whole picture as apples to apples.
So you're leading me to understand that Mr. Turkington's financial statements has an apples to pears comparison,
To the budget.
right? That he
Yes.
audited.
The budget is not audited.
Right, it's in the audited statement, so I'm not sure.
No, the budget is adopted by council.
Okay, but he still presents in his audited financial statements, he presents a budget. And I would say that if he presents, just like he presented 2021 as a comparison to 2022, typically, if there are changes in accounting policy, the 2021 numbers would be restated so that you have apples to apples. So if he's including a budget, I assume that it is apples to apples. But regardless, even if it's 236,000, going from 236 to 939 is a big delta, right?
But that 939 would not be the same number if you presented it in the same format as the 237,000 as is presented in the budget.
I didn't get that. Say that again. Then
So-
939
So
would
just
just be the same.
So just like, so if you go on page, what is, page 20 of the agenda. So just like the annual surplus here under the budget column says 73,644. But our financial plan bylaws, so our budget says 236,895. So you can see that all of what's here is not the same as all of what we budget.
So it's,
So this final 939 would not be 939 if you laid it out the same as the financial statements that had the 236.
Different standard. So I'm thinking is. Because we're reporting basically budget statement. At least then it's apples to apples throughout the year, it's based on the council actually looked at and adopted without all the exclusions that this.
Exactly.
This has just so many exclusions,
Yes.
but it meets the standards the government.
Do we need to make a motion, like, Councilor Byrne has made a motion
Yep.
on that? No, okay. Mr. Taylor.
He did, but there's currently a motion on the floor.
That's what I mean. So he's already made,
You. There's currently a motion on the floor and it's just to adopt this as presented.
right, okay.
And we'll move on to the next one unless we really want to get into amending motions again.
We don't want to, the other one, and that was my question and direction. So, before I have one other question that. When I go back to, contingency funds, I can't imagine how much we have on contingency funds on all our projects throughout the year. Like, it's got to be hundreds of thousands of dollars. Some of it's spent, some of it's not. Is it feasible to have a contingency fund surplus where we can put in so much money and have that pool of money to play with back and forth instead of adding a contingency and then taxing everybody on that contingency, you know what I mean? Because if we don't use that contingency, it goes into surplus. But if we had an actual contingency surplus fund that was specifically for that, that we could draw from, would that?
I would think that most contingencies, especially the big ones, are gonna be capital related. And that means the funding is coming from capital, unless it's grant funding. That's just a whole thing. But I mean, could be wrong, but if we're redoing Russell Street or something,
Right.
30% contingency, which could be hundreds of thousands of dollars. That's just actually just sitting there allocated for that project in the reserve fund. And it may not be spent at all.
Yeah.
Right.
So it shouldn't affect taxes, where it may affect it indirectly is thinking, that's our plan, we want to keep that reserve fund funded.
Right.
Then are we putting in too much if we really don't think we're gonna use that contingency? We do actually have a contingency. But
We
it's
do.
it's a generic.
It's generic, well, you know, that's kind of what I'm talking about, because the airport one that we voted on with the finances was actually on that pink sheet that were our expenditures or our planning for the next year, which directly results to taxation. It doesn't, well, it was on the sheet, right? So we need.
But it was coming from a reserve.
Oh,
was
it's
not
not coming
coming
from
from
a reserve, that part was coming from the reserve, okay. So we weren't, and so if we'd have taken that contingency out, we wouldn't have been able to.
It wouldn't have made any difference to
Made-
taxation.
Okay, okay, all right, that's my question. Go there. Yeah, go ahead.
On page 21. And I'm not real sure when I'm looking at the rate page, I'm sure there's more pages around so my question is around capital expenditures. Last year we spent $562,000 on capital expenditures, capital projects. Which is less than our amortization, so that's why we saw sort of a decline in the book value of our capital assets. We plan to spend, according to note 22, for what it's worth, Mr. Turkington, I'm not real sure. But we planned to spend 2.3 million, which is considerably more than 562. Was there a single project, or can someone elaborate on that? Why?
Sorry, I didn't bring my budget stuff with me. So. Sorry, on the spot. What the projects were.
It would probably been that big sheet.
I would absolutely,
But-
always got that.
Things of that value.
Do you have it?
No, not this year's though. This year's won't help at all. Well, actually, yeah, it might, if it's a carry forward.
Oh, Randy, all eyes on you.
That's a good example of a bit of million project that we planned to do last year, and just didn't get started. $1 million was there.
No.
Well, but it's the first dude is gonna house here.
Should I get on? That was in operating. Sorry, I'm having a total brain fart.
Then I'll feel time, it's like. I would stay.
Gonna give me enough
I would
space.
stay. No, but just to provide context, 562 million, and I keep on, we need to get on this capital asset thing. The 562,000 on $95 million capital assets. If we spend $500,000 a year, it's gonna take 180 years
No,
to replace our capital assets. So it's a very slow pace in terms of, getting things replaced, getting things upgraded and that sort of stuff. And I know it's a single year and the year before it was higher, but I just, I'd love to make some progress on the capital asset thing. Because we had, again, promised to taxpayers that we're gonna spend 2.3 million coming from reserves and other things to upgrade our capital assets, and we only spent $500,000. I'm sure there's good reasons, and some of it may have been carried forward, but it'd be nice to, I think we may have noticed that if there was 2.3 million spent versus 500.
and through the mayor, the two huge ones, the campground improvements, $1 million there. And caboose restoration, they're both carried forward to this year. They were in the budget for last year. There's $1.3 million right there.
One last thing, I just want to say, what I do find remarkable is the taxation on the page, like it's one of the last pages. Find it. Oh, page 36 of 60. Here, it is remarkable how well sophisticated the budget is versus what we actually brought in terms of taxation. So where with some of the projects and that sort of stuff, we have some bigger deltas between our budget and what we actually do, but with taxation, we're spot on.
Because we know the assessed value in time for the budget, so I'm able to get those spot on.
Any further questions? Okay, I've already called the question. Wait, so I just need a first and a councillor.
It's already been moved by Councilor McNary and seconded by Councilor.
Okay, so we just need an all in favor. All in favor.
Yeah, I'll make a motion. I never know when I can make motions. I'll make a motion to ask staff to bring forward a quarterly financial report so that we can address with financial progress against the budget that we approved.
And suggest somebody. Council receive quarterly variance reports on budgeted versus actual transactions.
Okay, so that's moved and secondary. Councillor Plan. Further questions to Mary?
How much is this gonna add to, your job?
I mean, to do these takes a couple of weeks. So,
Would, 6-month one be better than a quarterly one? I know quarterly is fairly,
so there's no point in doing one in the first quarter because we probably don't even have a budget yet. So there's nothing to compare to. Second quarter, so say June, that still at least gives council a little bit of time to change things up to see where things are at, absolutely. But there's a lot of things that aren't done until the year end. So such as amortization. We account for that at year end. I'm working more with the finance staff on us doing to get to this point quarterly. But we're not there yet. So absolutely, it's something that we can do. But it's not always going to be 100% accurate reflection of where we are, because sometimes there is things that are done at year end.
What percent would you give us on that? Positive.
I'd say like 75%. We don't do interest until year end because we don't know how much our interest is gonna be. We don't do amortization until year end. So there's a few odds and ends like that. We don't get, our actuarial report for the sick leave until February of the following year. So there's some things that aren't going to be exact.
And what are contingency funds and stuff like that? Could we get a quarterly report on that? And that kind of stuff?
Absolutely. I can give you a quarterly report on anything you want. I just want council to understand that it's not going to be, but it's going to be accurate, but it's not going to be 100% like the audited financial statements are. But it will, I think, sorry, I just lost the word. I
Will
was
it
looking
provide
for.
a guideline?
Will provide the information I think that Councillor De Bruin is trying to get at.
Because we just need the guideline, if you will, of where we are, where we're going, and what we're trying to accomplish, where we are, like that. Guideline.
So if I could suggest that council requests that at half year, June or July. June, July is like a madhouse for finance. So it is. And then depending on where that sits, at that point, council can decide if they need one at, say, October or not.
So when would be our first one then?
So if you want up to June, it would come to council late July.
Like July.
You answered my question.
Any further questions? We're on number 11, bylaws and resolutions. You notice the motions. Okay, so I was away until April 14th. Thank you, Councillor De Bruin and Councillor Plant for carrying out the duties of the mayor during my absence. I watched the YouTube videos, both of them, and both did a great job. So again, thank you. April 15th, I attended the recolonization workshop hosted by the Hub and Friendship Center. Norm Leach did a very engaging presentation. He's from a Tlingit band, but he was inclusive of all nationalities. And he presented in a way that I felt that it was really shared values and really bridging the gap. I really enjoyed listening to him. Just had a couple of notifications that were given to me. Human trafficking, there is an event tomorrow, Wednesday, April 19th, at the rec center here in the mezzanine room next door from 1 to 4. It's a free event. It's put on by Engaging Communities for Positive Change, a workshop to help us understand what this means to our community and to help us know what we can do about it. Human trafficking can happen anywhere. So again, it is tomorrow from 1 to 4 in the mezzanine room. And then, I'd also like to mention that this week is National Volunteer Week, April 16th to the 22nd. The theme this year is volunteering weaves us together. So I just cannot thank the volunteers enough for their heartfelt and dedicated service they provide to our community. Their talents, energy, hours they put in enable our community to have so much more. So we are so lucky and grateful to all of our volunteers. Thank you.
Yeah, I attended the April 15th decolonization workshop as well.
Mayor Hopeful and Councillor De Bruin, I attended the decolonization workshop as well, and that said everything.
But nothing to say for myself.
CAO report.
Go on, so you have nothing to report that you want to hear about.
Hey, any new business?
Oh, yeah, I do have one.
Okay, back up.
The floor to our director, for development services, pleading to say this.
Hi. So I never get to say anything good. It seems.
Forget.
And we've known about this for some time, but the province has asked us to keep a lid on it until they've announced it, but I am happy to announce that we did get the REDIP grant for the Downtown Revitalization and Infrastructure Program. This is the $125,000 budget item. The grant that we applied for was for $100,000, and then we were going to fund $25,000 of it from reserves. The province, however, decided to fund the entire 100%. So we are getting $125,000 from them. That does not mean that I get to go spend $150,000. The budget is still $125,000, and it won't affect taxation because it's coming out of reserves. So we're looking at hopefully getting an RFP out either by the end of this week or early next week. I plan to have that RFP run for about a month, and then I'm hoping to have it for council around the June 20th meeting for awarding it and get going. The project is, we're aiming to have it completed by the end of 2024. I was aiming to have the zoning bylaw done by the end of 2022, so we'll see how it goes.
Very, very good news. Good job. Good work. Councilor De Bruin.
Congratulations, I think that's awesome, particularly, our strategic plan had downtown revitalization as one of its main objectives. So I think it's great that we're able to move forward with that. Just coming out of this decolonization workshop, I think would be great if there would be room for public engagement, and maybe even a way of engagement with an elders committee, where we would draw upon the knowledge of knowledge keepers to bring stories of the downtown core to the future.
Madam Mayor, as part of the RFP, I am requiring anyone who applies to supply us with their engagement strategy. Keeping in mind, a lot of this is going to be sort of engineer and technical focus, but there is going to be that social aspect as well. And yes, I will mention that to them, that we would like to see that included.
So this, gonna also include how our pipes are under the surface by any chance?
So yes and no. What we're going to do as part of the RFP is I'm going to hear from these consultants about what they can do for the $125,000. And then we'll sort of negotiate about how much technical detail we go into. What I'm asking for is instead of one big document that's kind of a slog to get through, we're going to be asking for a series of smaller, kind of like a vitalization box set. That we can use each of those as individual grant fund applications. So those shovel-ready projects is what we're going for. Now, some of those might be, we need to apply for a grant to study what the pipes are underground, or if we determine it's better to do it with this funding, we'll do it then, and then use that grant funding to actually build the new pipes underground if necessary. So there will be some desktop only activities, and then there will be some more specific studies that are done. They'll kind of depend what we can fit into there, but at least we'll have a series of possible grant opportunities. The goal is to have a series of possible grant applications. So that we'll have the goal at the end, but we'll have accomplishable projects.
I'm really hopeful with the asset management plan being done now and that study being completed, that we will be more, grant shovel ready funded project.
So we're not looking to go for a big old document, no one's ever gonna look again.
Right.
This program, is eventually going to have a second intake. That second intake includes a $1 million, grant opportunity, for specifically implementation projects. So we're going into this with that lens of going after that next stream of funding.
And when's the second intake, do you know? How long we have?
No, I
Oh, yeah, okay, all right, great. Perfect, thank you, good report. Okay. So that was the, so any new business? Councilor McSherry?
I don't know if this is new business or not. But wondering how the Town Creek project is. Regard.
Yes, I did just receive a message from him during the meeting that has fought his way through the basic bid system. They changed it, made it more. Used some colorful words, but it's out.
Oh, at the same time, can local guys bid on this too?
They're qualified, anybody can bid one.
Media and public question period. Meeting is open to any questions from the media? None? Okay, I will take a motion to move this into a closed meeting.
that the meeting be closed to the public pursuant to the community charter, section 91C, labor relations and other regulations.
Thank you. So the room seconded by Councilor McNary. Very good. Thank you, ladies. Thank you.